Hey everybody, hey traders, Chris Pulver here, and happy 2024. Just taking a little bit of time to go back through some of the trades this year, some of the trade calls. I was actually asked to do like my top 5 or top 10, and I know that I'm live almost every single day. It's hard for me to go find one little segment and say, oh, I remember when I talked about that, because usually it's recurring day in and day out for several weeks at a time, even months at a time. So I thought I'd do today is actually go through some of the highlighted trades, look at my entire portfolio history for the year, and just kind of show how I thought through a lot of these trades, what my logic was when these trades started in late 2023 into 2024. And so far, I would say so far so good. I probably end up over trading a little bit when it comes to the indexes by going above or below, when the reality is if I just stuck with a positive drift, that probably could have saved me anywhere between $10, $15, $20,000 in scalps and lost hedges and things like that. But that's part of the territory comes with trading. So I thought what I'd do is let's go ahead and move myself out of the way here and take a look at the screenshot here. So 2024 year to date, little rewind, and we'll have a look at all things stocks, options, futures, Forex, crypto. And the year is not done, by the way, so there's still some other predictions that I'd like to come to fruition and materialize by the end of the year. Namely, in the crypto space, I started to basically accumulate all year, so I'll talk about those. Some pretty good trades on Forex. I've been in and out a lot of the Swiss pairs. Started adding a lot more futures positions to my accounts, trading ES and NQ and also MES and MNQ for partial hedgings, as well as some of my option trades and some income plays. And then options, I'm very active in options around my core positions, also active in options when it comes just to straight income plays. Then, of course, come my favorite stocks for the year. So what I'd like to do is actually go into my broker platform here, and I'm just pulling one of the accounts. Basically, where I'm at right now for the year is I'm sitting here up around $230,000 for the year. He's around $208,000, and hopefully I can finish the year on a positive note, maybe adding another 5% to that, which 5% of another 2.1 million would be pretty good. Obviously, the more the merrier, but I'm fairly conscious of the risk. I want to make sure that I'm protecting and preserving a lot of these profits. And so just taking a look at some of the highlights, this is alphabetical order. This goes all the way from crude oil all the way down to the ES. This is E-mini futures, and then gold futures, copper futures, micro E-mini on the S&P. Then we have natural gas. We have the NQs. We have the Russell. We have silver. Let's get into the stocks here. We have Alcoa, American Airlines, Apple, Abbott Labs. We have Adobe, Advanced Micro Devices. Obviously, I don't memorize these all from my list, but what you can see here, I think there's a theme. I'm a pretty active trader. It's pretty diversified. If I see an opportunity for income, I generally take it. I trade pretty mechanically. A lot of probability trading for me. And so if you look and see, mostly green compared to red when it comes to this overall position. Now I've taken some losses, like I said here. I mean, here is a trade on SPX, and SPX and SPY trades. Some of those losses would be lost hedges. This year, especially when we had that volatility event mid-July, late July into early August, that volatility event did rattle some of my positions. I ended up taking some losses on some. It wasn't hedges necessarily. I had some hedges that were profitable, but I had some naked puts out there in the SPY, in the Qs, in ES, and in NQ, and those actually busted me up for about a week or two. Now, fortunately, the market bottomed out. I ended up selling a lot of premium at those lows, and volatility spiked up into the 40s, 50s, and 60s. But you can see here, down on the ES. For a couple of trades. Now, this was a much bigger number that I've clawed back from with income, but this probably would have been a $10,000, $15,000 loss, on the account that I managed to claw back and get another $5,000 or $6,000. Hopefully, I can finish the year positive on this. But what I discovered is I probably overtraded on some of the indexes. I should have just stayed mostly on the bullish side, but the year hasn't been just easy bullish. We had a pullback in April. The theme around the Fed: are they going to raise rates? Are they going to cut rates? Are they going to pause? Are they kicking the can down the road? September, the Fed officially cut rates by 50 basis points. It's been a long-awaited deal. The market's hitting at all-time highs, pricing in a lot of this perfection. So moving forward, some of my big trades into the end of the year, it really is, are we going to see higher highs in gold, higher highs in silver? Are we going to make this movement into the broader market as opposed to just the high concentration of Mag 7 and AI? And that has happened here for the last couple of months. But some of the highlights, I will say, some of my favorite trades that I can recall memory-wise would be Anything in China thus far has been pretty good to me. So Alibaba's been a pretty good trade. Baidu's been a pretty good trade. Like I said, I've still got some early stages on the Bitcoin side. So BITO, IBIT. Chewy's been a good trade for me as well. That was a nice little diagonal spread. Gold's been a good trade for me this year. Let's go to GLD. FXI's in the China space. We go to GDX and GLD. Pretty solid profits there. IBIT, that's in Bitcoin. Russell, a little bit of profit there. JD, that's JD.com. KWeb, another one for some profits. And I actually surprisingly made a lot of money this year on Philip Morris or Altria. The ticker is MO. It started out as just a dividend play for me, around $40. And I was essentially just buying shares to collect about a 95 to 98 cent dividend every quarter. But it turned out that the price appreciation was way more than I expected. And so a run from $39 to $50 gave me a decent chunk of profit on top of adding cover calls to it to lower my cost basis, adding some cash secured puts and some credit spreads. So it turns out that was a pretty decent chunk of profit this year. Some other big ones, Pfizer's been pretty nice. I'm still in Pfizer with a couple of running trades that I'm looking to close out here in the next maybe 30 to 60 days. Some other big ones, SLV. I said gold and silver early on. Gold and silver have been two of my favorite trades this year. I'm a little bit heavier in silver than I am in gold, partly because gold made a nice run early in the year from Q1 really by March, April. I actually remember talking about this with the A1 trading team. Nick and I were on a lot of sessions talking about gold. And when we had the initial breakout on gold this year, let's go back to GLD for a moment. So I was long on GLD. And really, this whole trade started with all this sideways movement. So we had a high back in 2020. We had another high back in 2022. We had equal lows to build from around 150 to 160 on GLD. So I started to dollar cost average into these lows. There's some really good structure here at the 160 level. And then once we had a breakout above 195, I was already long with some shares. I started adding in diagonal spreads. And so what I did was I essentially bought a long dated call, and then I sold against that every 30 to 60 days to lower my cost basis. Well, when gold made this immediate run right here out of this breakout level and made this immediate run, I had a 225 sell call from a buy around 185 or so, 180 or 185. And so let's see, if it was something that was like a 180, let's just say 185 to 225. Okay, so 185 long call to a 225 sell call, that is a $40 credit when it was all said and done. Now, I obviously paid for the debit, and I was actually seeing within the first month or two of this trade, I was seeing this trading for about $37 to $38 credit. Now, I still had maybe 1 to 2 months in the trade, and I thought for capital efficiency, it is way better for me just to take profit now and get out and redeploy. And so for this to run what was supposed to be like a 6 month to 12 month trade, turns out that I was in and out of the trade within about 45 days, which worked out obviously just fine. But I still have some shares of GLD. My diagonal spread, I did a diagonal spread in here and then another diagonal spread in here in order to capture some pretty nice runs on these two pushes in gold. After I had some good profit in gold captured, I then started to take that profit and allocate into silver. And here's why. Gold is sitting here near all-time highs. Now, I realize that once we're in a bull market, once we're at all-time highs, momentum begets momentum, and we could certainly go higher in gold, but I don't necessarily have a measured move now. It's just in no man's land where I'm just trying to guess where the market might top out. I'm still pretty bullish on gold. If I zoom in, I actually like getting dips and pullbacks on gold to stay pretty invested until we hit roughly 300 or so on GLD, which would translate to approximately 3,000 on XAU USD. So if I take a look at just some simple levels here, if I pull back to the 50 or the 100 or the 200 moving average, I'm looking to see how long we can maintain this dynamic support with our automated trend lines and just see if we'll just stay in a trend and stay in a trend and stay in a trend and just buy the dips until we hit an appropriate level. This could be great for just a nice healthy trend in gold, or I look to see if price starts to capitulate or starts to run very aggressively. Then I'm going to start looking to trap more profit and profit faster, just in case we have what is a violent push up and then a violent correction that all of a sudden comes back. Now, one thing I'll be watching is if we stretch really far away from the 200 moving average based on a percentage move about 20 to 25% away, I will start looking to trap some profit, because historically when I've seen that as a 20 to 25% distance away, we start to see that tops are forming, and then the market all of a sudden goes to a reversion where we start to come back and rebalance. But right now that's not the case, and I still think gold is in a nice, healthy area. So I also watched this quite a bit when I started to migrate from my gold profits into silver. Silver.
With Pulver Alerts, you get access to the complete log of all of Chris Pulver's trades. But who is Chris Pulver? Chris has over 20 years of trading experience, and he's a licensed money manager. He trades all aspects of the market, including Forex, stocks, ETFs and futures, crypto, commodities, and just about everything else. Let's talk more about where you can find these trades. Inside of the A1 Trading Discord, on the left-hand side, you'll find Chris's section. It's broken up into different categories to make it easier to find the trades you're most interested in. Here, you can browse his trading journal, where he shares videos and general market analysis, his indice trades, commodity trades, Forex, stock and options, and his futures trades. All trades come with analysis, including entries and exits, risk to reward, and more. We're very excited for the future of Pulver Alerts, and we hope you are too.
Was taking a lot longer. Take a look at Q1 for this year. Q1, we had a nice little surge on silver from 23 up to 29. Now, percentage-wise, it's a pretty decent move, and I actually confirmed this just today in one of my live sessions. Silver's actually outperformed gold in 2024. So even though it looks like, oh man, silver's barely moving, percentage-wise, it actually outperformed gold. So that's another reason I position myself a little bit heavier in silver, and also with my measured moves. I like this level right here. I've been long silver since we had our COVID crash. I looked at this as a low to high, getting some accumulation levels in here. Just, you could draw a really simple fib from low to high. Here's a 382, here's a 50, here's a 618. These are really good levels to dollar cost average into. I'm looking for the push to finish up towards $35.88. We'll just call it $36. And then if we have another cycle higher, I'm looking to see if we space out to another, let's say $45 to $48 move. And so my big target here is around $36. That's target 1 for me. And then I might be willing to hang on to this to target 2, which should be around $48. Now, if I go to my broker platform and go back into my positions for silver, I still have some futures trades. So collectively, I've got about $8,600 in silver futures that's still running. And then I'm long on SLV, which is up a decent amount of profit right now. I'm up about $38,000 in change. And I'd like that to get up to maybe $45,000 or $50,000 in silver. I'd like to see if my silver futures positions get up to another, maybe let's say $10,000, $11,000, $12,000. Those are just credit spreads. I'm not long the futures contract, just doing options on that one. SLV is a combination of puts, credit spreads, ratio spreads, own shares, and I'm pretty aggressive on SLV, more so because I think gold can go higher, but I'm not looking to get heavy in gold when I think silver can still outperform. One more chart to kind of put this all together would be gold versus silver, and in this little stretch, we've had a pretty good range on gold versus silver, where I could see this resistance and this support. And this gives, for at least right now, if this is going to go down, this is silver versus gold. So we've got gold versus silver. So if it's going down, that actually shows me that silver is outperforming gold. Now, the good thing is both of the instruments can go up. But if silver actually goes up faster and outpaces this, then this is a good spot for me to look at maybe taking on that heavier position in silver, and then looking to see where I can start protecting profits if it's hitting those targeted levels that I'm after. So silver's been a nice play this year. If I take a look at some other stocks here, I've got a little list. GLD, SLV, MO. Let me show that one. I talked about that one earlier. Had a surprise price appreciation move. I was buying MO back here for a dividend play, just trying to get in early, put in some naked puts. I have a 35, a 32.50, and a 30. Those cash levels have turned out pretty nicely. We've been going to the upside, and this is actually the generosity of the market, because I did not expect this stock to make this type of run. So what I'm at right now is I have this covered at $50 and $52.50, and we're trading at $49.82. So the nice thing is I'll still collect those dividends. I'm also lowering my cost basis. If we pull all the way back down to 40 again, I will still just use covered calls to stay out of the way, lower the cost basis, keep collecting dividends. It's roughly about $1,000 a quarter. And so for all of my accounts, that would be roughly that's about $30,000 per year in, and really just credits. So that adds up nicely. That lowers the cost basis, and I also think this is a bit of a defensive play for me if we start to see this late cycle, fourth turning, all these things that the markets are talking about late when the the expansions are done and then growth slows. I mean, something like this that's just value driven, priced pretty low, priced pretty fairly. I like the stock. And also they're sitting on a ton of cash. They paid a very reliable dividend. So this is not me telling anybody they need to jump into MO, because when I got into it in the high 30s and low 40s, it was a great spot to buy it at. If we come all the way back there, I'll just do it again. This to me is kind of a buy and own, collect the dividends, and have that be just a low risk trade. But obviously the price appreciation on top of that is kind of the gravy on top. So that's one trade. Alibaba and Baidu, I talked about those. Alibaba, this has been just a straight rip. Now, this whole position on China, I look way smarter than what I actually am. But I will say this. Since China created this low in 2022, we had a big deleveraging in the U.S. in late 2022. China still hit these official bottoms late in 2022. China has been underperforming the world for the last couple of years. They have not come out of COVID the same way that other countries have. They have essentially offered zero stimulus or forward guidance to lift the market until the last couple of weeks in late September into October. And so this rip that we're seeing right now has been just built up and pent up. And all I kept reading about was China's uninvestable. Nobody should invest in China. And it's a contrarian play. So when this technically started to set up, I was long on Alibaba based on this structure right here. I thought, okay, if we have a head and shoulders pattern, we're building some strong support in this area right around this $80 mark. So I like this trade, and I started to build into this around $80. Now, thankfully, because of the way I trade options, I've lowered my cost basis on Alibaba into sub 80, into even the low 70s. And the fact that this is now some stock that I own in the 70s and a rip to the upside at 116, I'm up anywhere between like $30 and $40 a share. And I'm looking to see if I can just hit some measured moves. And so if we go from low to high and a swing up to 130, that's a pretty good profit target for me. If this is a wave 1, this is all a very long wave 2. And then we're getting a push for wave 3. A 4 to 5 still has more upside. And so if I'm going to hang on to this, I have about a 90-day horizon, maybe a 120-day horizon, if I'm liking the structure and liking that we're still postured bullish. What I'd like to see on some of these China plays would be, all the profits have been really paid out for me in the last 2 to 3 weeks, even though I've been sitting on these positions and actively lowering my cost basis with options and also generating some income by going out of the way, doing some, out of the money credit spreads and out of the money ratio spreads and all these things that have been income generators. And now that income is looking good for full profit, and all my shares that I own are looking better to manage profit as well. So Alibaba and Baidu have both been pretty good for me. And here's Alibaba that just failed to make a double bottom. But if we go into Baidu, same type of thing, just shy of the lows. This one I think has a good upside potential to get into the 150s, and so I'm long. And this last little stretch, the last couple of weeks have been really nice. But I'm looking for a bull flag. I want to see if this continues to go higher. I'd like to target the 150 to 160 handle on Baidu. And then if I go down the list here, FXI, I was long on the shares. I have some credit spreads, some naked puts as well, some cash secured puts. This one is going to get called away for me around $30. I'm not chasing this one. I'm not rolling this one. I'm just going to let this one get called away. Let me check my expirations on this one for FXI. So if I go to FXI, take a look at an account here. So let's go to FXI, which is right here. I have the shares. The $29 calls out to December. Let me see if I can actually look at this for a roll. I don't really want to go out in time, but let me see if I can just do a roll. Does this offer anything? I don't want to roll it out. If I take the expiration back to the 20th, if I roll this, nope, it's not going to let me. So can I get any extra premium here? I could roll it down. Now, this is one thing that I could do that's fairly interesting. It's not going to be a big game changer here because I'm pretty much maxed to the upside. But if I roll down from a $29 call down to a $28 call, what I could actually get here is an extra 30 cents of credit because it's only $1 difference and the broker is going to actually give me $1.25 to keep the expiration the same. Now, if I go back in expiration, I could roll this. See, that's not going to give me the credit that I want. So if I go out in time and keep the expiration December 20th and I roll this down by $1, I can actually generate an extra 25 cents of credit. Now, I'm going to think about that and let that just digest for the day, because maybe I do that, maybe I don't. Right now, I could probably just close out the shares and let me go back to this position here. If I close out the shares and the covered call, right now I'd close that position out around $28.73. Now, my max profit would be closing them out at $29. So if I just took it right now, I'd be sacrificing about 26 cents, 27 cents of profit. If I do one more roll and I roll it down, then I'll basically make that up. So I'm going to let that digest for a moment. But either way, it was a nice little trade on China. We're ripping to the upside here. If this is a double bottom, this is what I like about the structure here. Here's a low, here's a high. If this is my low and my low, if this is a double bottom, breaking this high right here symmetrically puts me up to a measured move of this low to high swing, this low to high breakout, which is really just this yellow box stacked on top of itself. And right here you can see on my chart, double bottom measurement at 46. So although I am capped at $29, I might still participate with some type of pullback trade with a credit spread and looking to see if we make higher highs and higher lows until we hit this kind of $45 to $46 zone. So there might be some income trades for me left on FXI in the next maybe 2 to 3 months. K-Web, another one, had some diagonal spreads, took some shares, just a lot of transactions here on China to the upside. Recently, I had a diagonal spread. I bought the 23 call, had the 35 sell call. That cost me around, I want to say $3 to $4 after selling against it a couple of times, and I turned a $3 or $4 debit into a $12 credit. So I ended up walking away with about $8 or $9 net profit per contract, which is pretty nice. And then JD, same type of thing. Lots of income trades here on JD. I started to also track this one with what Michael Burry was doing in his portfolio. He had about 10% allocation of his fund to JD.com. Not that I'm copying Michael Burry, but I thought same kind of notion. The valuations were there. The fundamentals were there. I'm like, if China comes out with any type of stimulus package, not even a hardcore stimulus package, but just to lift animal spirits and the market actually starts to price any of that in, then JD has a lot of upside. The fair market value with the discounted cash flow is in the 60s, like $62. And we're trading here at $20. So I had some shares. I started to do some naked puts. You can see it in my portfolio here if I go to JD.com. So I have a 27, 25, and 23. These are all cash secured puts. I've closed out the shares that I bought through my Pulver alerts. I closed out my shares. I bought it at $32.50. We had a nice little rip up here into the 40s. I wanted to go ahead and just protect the profit. It was running uncovered. So I was up about $23 a share in like 2 weeks. And I just looked at the percentage. I mean, by the time I bought that, this thing was up about 48%. Good enough, and if we get a pullback, that's fine. I'm looking for a pullback. I look for bull flags. I look for something I can start getting back in. I do think that this is another stock that has some good potential. We could eat back into some of these. These would be supply zones back in here, some good structure. I see this as fair market into the $55 or $60 zone. So a pullback would be nice, and then a push higher would be great. I'd be out for some profit there. I'm not asking for JD to get back to $100+ a share. I could care less. I think this is a nice run and a nice boost to my profits in 2024. A couple other ones here. PayPal was a nice one. PayPal, we're trading at $79.88. This was a long call at $57.50 with a sell call against that. This is a diagonal spread. That's a $22.50 max profit. And I closed this one out for about $21 and change, and I didn't even have to wait to expiration. I did this trade all the way out to, initially it was like October 18th or whatever our monthly expiration is. Let me double check that. So what's an October expiration? October 18th. So I was going out to October 18th. I had about 94 to 95% of the profit prior to that. And so we had this nice rip on PayPal. It was good enough for me to take it out. I think the trade cost me about $10 for the debit. Ended up closing out with a net credit of about 12 to 13 bucks. Pretty happy with that one overall. Apple, this one I shouldn't be that excited about, but the reality was Apple was one of the most hated stocks in 2024. Maybe we don't remember that because lately Apple's been just back up to the top of the food chain, Mag 7, largest company in the world, competing against Nvidia, Microsoft. But when Apple was down here off about the highs from about maybe 17 to 20%, I was actually interested in buying Apple and Tesla. So there's your 17% discount and I bought at the lows around 165. I put in some ratio spreads, I put in some credit spreads, and so as Apple started to rip to the upside, I actually have a covered call up here at 195, and Apple blew through my covered call. Now, all I did is I rolled it out further towards the end of the year, so I'm still keeping the 195 strike price, but I generated an extra like $3 of credit. So this is like getting it called away at 198. Okay, and even though price is trading at 223, all of my ratio spreads, all my credit spreads that I staggered into over the last maybe 6 months of trading have all just finished in profit. It's been a nice little windfall of profit on Apple throughout the year. So Apple's been a nice trade, even though it was, like I said, hated early in the year. And everyone's like, oh my gosh, Apple, they're having trouble in China and their logistics and their supply chain and the demand is down. And here we are talking about Apple just off the all-time highs. I think Apple is always going to be a forever stock. Their market share is way too powerful and way too strong. You know, if they start to innovate more with the AI space, they start innovating with their own chips and taking out the competitive advantage of NVIDIA, I mean, Apple is going to be a household name as it has been for the last decade plus, which has been pretty impressive. Okay, and then lastly, to kind of wrap things up here, I'd mentioned Pfizer earlier in passing. Pfizer doesn't look like it's done much, but this trade has actually helped me generate several $1,000s per account. If I look at my overall position in Pfizer, I think I'm up around, let me go to everyone's account here. I think I'm up around $18,000, $18,000 in Pfizer. So how did I get that type of chunk of profit? Well, it doesn't seem like much, but basically I just did a long call and a sell call that I have been periodically selling calls and selling calls and selling calls and selling calls. And I've just taken my debit from like $4 down to about $1.80. So right now I only need Pfizer. I mean, realistically, I'm in profit on the trade. My current trade that I have running is a 25 on the long call and a 29.50 on the sell call. Now that's $4.50 of credit. Okay. Now, since I lowered my cost basis down to about $1.80, that gives me a nice little chunk of profit of about $2.70 per contract. And I'm in for 10 contracts, which is represented about 1,000 shares. So it doesn't seem like much, but because I'm in with a slightly bigger position, I took this one of 10 contracts because if I can get 20 to 30 cents in this trade, that translates to $200 to $300 in income, or that translates to $200 to $300 of lowering my cost basis. So because I've done that maybe 3 or 4 times, I've been able to work my cost basis down from $4 down to under $2, which has essentially saved me 50% of the cost. And this is why I love trading options, because this stock has done nothing. This stock from the highs is still at a ridiculous low. We've had a discount, or a drawdown rather, from highs to lows. Pfizer's been pulling back. It's almost a 60% discount. Now, some traders look at that as a discount to buy it cheap, and others look at that as, you know, the stock market's up this year and Pfizer's lagging and Pfizer's not going to be good and Pfizer's going in the toilet. Well, if I look at some simple analysis here, what's fair market value based on the discounted cash flow model with Pfizer? And I'll show you, and this is part of the reason I'm interested in holding, but also lowering my cost basis. We're sitting here with a price to earnings, price to sales that's dirt cheap. We're sitting here with a fair market value at $83 and change. We're well undervalued. Now, this obviously needs to have some type of catalyst to drive it up. And I don't know if this has to be, okay, Pfizer gets rid of COVID stuff or starts to focus more on Ozempic and weight loss, the triglycerides or whatever the heck they're called, right? So if they get into the Ozempic game like Eli Lilly, that's been gangbusters this year, maybe Pfizer, as a big pharma company, gets into the weight loss game, and this has reason to go up into the 30s. Well, if that's the case, I have the shares, and I'm doing that for dividend plays. I have some ratio spreads. I have some naked puts that I'm willing to own more shares. But I look at this as, if I just own it here, collect a nice steady dividend of around 5.5% to 6%, and we have some upside of even this high to low at the 38 to 50% zone, even if we get back to the mid 30s, I can turn Pfizer into a nice gain. So some good profit already, some current positions I'm running, and if it gets called away, it'll be at $29.50. If it doesn't get called away, guess what? I get to add in another sell call against my long call, saving me another 20 to 30 cents, adding another $2 to $3 to my bottom line, and I just keep chipping away until it gets called away. So, and if I just sit on and own the shares and exercise them at a $25 low, my break even still going to be about $26 on a stock that hopefully is trading around 29 to 30 bucks. So, all that being said, for this recording, this little 2024 rewind, there's been a lot of trades. And I think that's the one way I can summarize this is, I'm not just a I just trade this, but I will say moving forward into 2025, I take a lot of trades based on high probabilities and income opportunities. That's why I like to trade options. I don't have to invest. I don't have to tie up my capital in a bunch of different stocks individually. I like to invest in the index. I like to trade actively around the index. If I do invest in stocks, I have a plan, and they have to have a lot of runway and a lot of open space to the upside, or they're just so undervalued that there's room for them to jump. One trade that maybe I will regret talking about, but seems to be doing pretty well, is OXY, and this has been recently with the jump in oil. So my OXY position, if I take a look at the actual stock, I do own some shares. I'll go to this account right here. I do own some shares, and as of October 25th, if it gets called away, this would be a repair trade of around $300 to $400 of profit, and so I can turn, rather than losing on a credit spread, I could actually turn this into like a $300 to $400 winner. So right now it shows year-to-date P&L is up about 230. I'm still in an open drawdown. This is a this is a long put to hedge. There's my covered call against the shares that I own. When this is all said and done, this should net out about $300 to $400. So that's a repair trade. This isn't a big one that I'm really celebrating. It's just knowing how to work your costs and your break evens, and hopefully using options to make more money. That's been the game for a long time, and if you don't know how to trade options, I would highly encourage you to learn it. If I can be one that can help you learn it, I'd love to do that. If I can help you trade options and trade them strategically and put the same trades in that I'm taking, you can follow along. So all these good things out there. So to wrap things up for today's little 2024 year-to-date rewind, we've had a lot of trades running. I know just on commissions alone, I've probably logged over 2,000 trades actively in the portfolio. I tend to trade, on a daily basis. I'm actively, maneuvering things in the portfolio week to week. I have a lot of routine trades, like every 30 days I do this, every 45 to 60 days I do this, every, 90 days I do this. And then if I spot an income opportunity or the seasonal earnings reports, I trade a lot of earnings as well. So all these things, and all it does is it's trade after trade after trade. I trade a lot of different products. I trade stocks. I trade options in stocks. I trade ETFs and indexes. I trade futures and futures options. I trade currencies in the Forex market. I also trade crypto. Why do I do that? Because I like to be diversified. If all of my ups and downs were tied to just an index, or all my ups and downs were tied to a couple of stocks, I'm going to live and die, profit, loss, all with what those things do, and it's truly not in my control, right? If we have a downturn in the market, we go to a 15, 20, 25, 30% bear market. If I'm tied up in the S&P, I don't have any way of generating money. I'm just going to be fighting a drawdown. So that is why I diversify, take a lot of different instruments in all these different sectors, because I think there's always going to be something that's rotating. So whether or not they all go up or down, notice how I haven't said anything about bonds. I will say that I did have a trade in TLT this year, so this will be my last highlight, but I am thankful that I'm out of this trade because my measured move on TLT was actually up here towards 105. We hit a peak of around 101, and I started to trap some profit, and I'm really glad that I did because I would have been giving back most of my gains. I had an $82 long call, and I measured a symmetry move up to 105 once we hit this bottom in, it was Q4 of 2023. And so I just did a swing trade, looked at this to be a measured move. I bought an $82 call, which was a deep in the money long call. And then I was selling against it like a diagonal spread, taking off, chipping away at the debit over and over again. And once we made a run into the 100s, as the market was anticipating that the Fed is going to cut rates, the yields started to drop really aggressively. The bond market started to rally higher. But recently, it just shows us that it was pretty much priced in. So I got out near the highs around $99, and I'm happy with that because dropping $5 would have essentially offset most of my gains. So I turned like a debit-wise, I don't recall. I know an 82 to 105 maxes out around $23 net credit or $23 credit. I think I paid about $12, lowered the cost basis down to about $8, and ended up closing out for nearly $18 or $19 a contract. So it worked out pretty well, and happy I took it because this has made me very happy that I'm not in bonds, and I'm focused more on, instead of having a 60-40 portfolio with bonds being the 40%, I'm looking at way more diversification when it comes to gold and silver and Bitcoin. So I know that's a lot of talking, that's a lot of running through the charts and the broker platform, but overall I would say pretty happy with the year 2024. Dealt with the April pullbacks, dealt with the July and August volatility. We're sitting here at all-time highs going into a major election. Stimulus came out of China. Will the U.S. markets do the same thing and still be able to be priced to perfection for a while? If so, seasonality-wise, November, December is typically a bullish time in the stock market for the U.S. I think we finish on a high note. I expect the markets to go higher, and hopefully there's more P&L to show for it for the next couple months, and I'm sure we'll talk all about it in our live sessions. So if that helps, awesome. Thanks for looking. Thanks for watching. And if I can help be instrumental in helping you learn how to trade better, diversify into other asset classes, not just trading currencies only, not just trading stocks only, not just buying and holding, not just dollar cost averaging, but actually using these vehicles to generate income makes a big difference. Okay, so that's it for me. Thanks for watching. Happy trading lots of profits, and I'll see you out there in the live markets. Thanks, bye.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.